Hey entrepreneurs, welcome to Digital Gigger.
Starting a business can be an incredibly daunting task, especially when it comes to securing the finances necessary for success. But fortunately, there are many creative ways to fund your startup if you know where to look. This video will discuss some of the most interesting and unique funding sources available for entrepreneurs who are looking to get their business off the ground. From alternative lending institutions to crowdfunding platforms, these creative solutions could provide just the financial boost your startup needs. The concept of creative startup funding has become increasingly popular in recent years, as more and more entrepreneurs seek to find innovative ways to finance their business endeavors. Creative startup funding can involve a variety of different approaches, from crowdsourcing platforms like Kickstarter and Indiegogo to venture capital investments. Regardless of how the funds are obtained, such resources can be invaluable for businesses seeking to launch or grow their operations. One advantage of creative startup funding is that it allows entrepreneurs to establish control over their own financing decisions, rather than having to rely on traditional sources like banks or investors. Entrepreneurs have the freedom to choose whatever method works best for them and their company's goals. Furthermore, some forms of creative startup funding come with fewer strings attached than other financial vehicles. This can provide greater flexibility when it comes time for growth or expansion plans. If you're a business owner looking for ways to fund your enterprise, creative financing is an option worth considering. Creative financing involves the use of more creative methods to raise capital for your business beyond traditional bank loans or investors. There are several advantages to taking this approach that can help you stay afloat and make progress in the long run. One advantage of creative financing is that it allows businesses to access funds without giving up equity or having to take out large loans with high interest rates. This means that owners can keep full control of their company without any debt burden from loans, making it easier for them to turn a profit quickly. Additionally, there are often fewer requirements when applying for this type of funding, reducing paperwork and speeding up the process significantly. Angel investors are a widely popular form of business funding. These investors provide capital funds to businesses in exchange for equity, debt, or convertible securities in the startup. Angel investors have become increasingly important for small businesses and entrepreneurs who need capital but don't have access to traditional sources of financing. Angel investors often invest their own money and usually prefer to invest in early-stage companies with high growth potential. They can be individuals, syndicates, or even venture capital firms that look for innovative products and services with the potential to make a huge impact on the market. Angels bring more than just money. They also bring knowledge, advice, contacts, and strategic guidance, which can help you accelerate your business to success. Working with such an investor can help you build credibility and create lasting relationships that will benefit your business in the long run. Crowdfunding platforms have become increasingly popular in recent years as a way for small businesses to acquire funding. These platforms offer entrepreneurs the opportunity to raise money from a large pool of potential investors without having to go through traditional routes such as the bank and venture capitalists. This can be an invaluable tool for businesses that may lack the resources or connections necessary for other forms of financing. Crowdfunding platforms generally allow users to create a campaign or project with a specific funding goal. Investors can then choose from a variety of projects, which often include detailed information on how their money will be used and what they'll receive in return, such as equity in the company. The success rate of these campaigns vary greatly. Some are widely successful, while others fail miserably. Regardless, crowdfunding offers business owners an alternative option when it comes to obtaining essential funds for startup costs or growth ventures. Bank loans are a form of business funding that can provide a much-needed financial boost for companies of all sizes. They offer an accessible solution to businesses who need capital to cover startup costs, purchase equipment, or expand their operations. Bank loans have several advantages over other forms of financing, such as the ability to borrow large amounts of money and secure competitive interest rates. In order to apply for a bank loan, businesses must submit an application outlining their goals, objectives, along with supporting financial documents such as a balance sheet and income statements. Once approved, businesses receive the loan amount within days, providing them with the swift access to the funds they require. Additionally, bank loans offer flexibility in terms of repayment options, from fixed monthly payments to variable payment plans, depending on their cash flow needs. Another financing method to look at is grants and awards. They are fantastic ways for businesses to secure financial support. With the right funding, organizations can achieve growth, expansion, or even get a jump start with their operations. Businesses of all sizes have access to a variety of grants and awards from both governments and non-government sources. Government grants are usually open to any business operating in a certain country that meets a certain criteria. These could include industries such as agriculture, technology, energy, tourism, and more. Eligible businesses may receive funding from specific projects or activities related to their industry. You'll have to check if the government of your country offers any particular grants or government programs to help businesses. Non-government grants are available from private foundations, companies, or other organizations with the goal of supporting certain communities or causes. Depending on the grant provider's requirements, funds can be used for a variety of purposes, including research and development projects or new product launches. In conclusion, diversifying your funding sources is a great way to ensure that you'll have the necessary funding to support your mission and goals. It's important to remember there are different types of funding available, from grants and loans to crowdfunding campaigns and donations. When it comes to fundraising, have a variety of options that can be beneficial for both small and large organizations. Taking the time to research each option carefully can help you identify the best approach for your organization's needs. If you enjoyed today's entrepreneurial video and have not already subscribed, do it now so you know when the next video goes up. And if you give this video a like, that's really appreciated. Until the next one, have a great day, guys.